Ladies and gentlemen, welcome back to the channel. We will get into all of your Tesla stock news and updates that you need to know. First off, what in the world happened today and after hours? Did Elon just purchase hundreds of millions of shares of Tesla? We will also go over a new note out yesterday from Jonas around Tesla and why he's sticking with his 80% upside call over the next 12 months. We also have some very important economic data coming out tomorrow. I will put this into context exactly why this is important for our markets. Beyond that, we do have some other interesting developments. Apple is down almost 1% in after hours as Berkshire Hathaway has sold about 10 million shares. And potentially you have one of the greatest short squeezes of all time that is currently happening. So first up, what happened today in Tesla stock here in after hours? Well, the algos even reacted to this. Tesla stock went soaring, at one point up over 3%, and basically everyone was wrong. And it's pretty dang rare to see the algos interpret something that is not correct. Even I was wrong. I thought this was real, but unfortunately, Elon did not just purchase about 300 million shares of Tesla. So this is the filing that just came out. These are the 13F filings that, big investors have to do every year at the bare minimum. If you're an owner of over 5% of, a company, you have to do these every time you make a new transaction. But Elon Musk, you can see right here, sole voting power, 715 million shares, and it does say he owns 20.5% of Tesla stock. It says right here, amount beneficially owned, 715 million shares, which includes 411 million shares of common stock held by Elon Musk and his trust dating back to July 22nd, 2003, and options to purchase 303.96 million shares of common stock that are exercisable within 60 days of December 31st, 2023. Now, I had to go back to last year's 13F filing and kind of compare to see if anything's different, and in fact, it's exactly the same. Sole voting power, 715 million shares, percent of class represented by amount in row, 20.6% ownership. So, nothing has changed. It says amount beneficially owned, 715 million shares, which includes 411 million shares of common stock held by Elon Musk and his trust, options to purchase 303.97 million shares of common stock that are exercisable within 60 days of December 31st, 2022, and the percent of class at 20.6%. So virtually the same filing from a year ago. That's why it's kind of strange how this happened, because Bloomberg picked it up, all your news wires picked it up, as Elon just bought a crap ton of Tesla stock, but indeed that just doesn't look correct. Nonetheless, Tesla stock is still up 0.5% here in after hours. Even if you do mess up a little bit, the algos pick it up. It can still have a positive effect, even though nothing really changed with Tesla. I think that actually just shows you how negative these algos are and investor sentiment is around Tesla right now, even though at this point it's clear, this is not true. Elon did not purchase 300 or so million shares of Tesla. Tesla stock's still in the green because of it. A normal stock, say Nvidia or something that was super optimistic, super bullish, if this same error were to happen, the stock would probably be down quite a bit. On another note, Apple stock is down almost 1% in after hours. If you've watched Apple before, that's quite a large move. And that is because Berkshire Hathaway has trimmed their Apple position by about 10 million shares. Now, they still own hundreds of millions of shares of Apple, so this was a very small sell, but it was still a sell nonetheless. And as we do get more of these 13F filings that come out, I expect we're going to see a lot of weird movements in our markets. Just wait until the filings come out for stocks like Nvidia. In other news today, Nvidia replaces Alphabet as Wall Street's third most valuable company. Nvidia rallied 2.5% today, putting its value at 1.825 trillion, while Alphabet stock climbed a little over 0.5%, leaving it with a value of 1.821 trillion. Nvidia is now the third most valuable company on the US stock market. But I'm actually not talking about Nvidia when I spoke about one of the most impressive short squeezes you will ever see. That's actually SMCI. This stock was up 11.25% today, up another 2% in after hours. And on January 2nd, the first trading day of 2024, the stock was around $280 or so. Now, it's $896. You are going through a full-blown short squeeze. I've never seen a stock this overbought before. You have an RSI of almost 96. You're not going to find that. This is the most overbought stock on our markets by a long shot. The problem is when you go through short squeezes, they tend to end badly. And for the AI chip sector that's basically been going through a short squeeze for 2 months, when that thing burst, it could come crumbling down quickly. I mean, but you almost feel bad for short sellers in SMCI or Supermicro Computer because, oh my gosh, short interest has been climbing ever since January. It went from 9% to now 11.26%. The dollar amount sold short at the start of 2023 was about 1.28 billion. Now it's 4.24 billion. Short sellers have lost over $3 billion in this stock, and it's not even clear a lot of shorts have even covered on their short positions. They are getting smoked at a degree in which is pretty rare these days. I mean, to lose over $500 per share that you shorted in 2 months? Let me just tell you right now, this is a bubble, and when it pops, AI stocks are getting smoked. Be careful out there. If you are investing in these names, you're no longer investing. You're trading, right? And you're susceptible to lose good chunks of your investment for years, potentially. Potentially SMCI, once it peaks, may take years to get back to where you're potentially buying the stock at right now. So just keep that in mind. I just want to be the bearer of bad news, if you will, that this is indeed a bubble on preposterous terms. I mean, holy crap. That's just insane. The next big catalyst for the AI ecosystem is likely to be Nvidia earnings. Nvidia tends to sell off following their earnings. At least over the past 3 earnings, Nvidia has sold off anywhere from 8 to 22% over the next 4 to 8 weeks following their earnings. So I wouldn't be surprised if something like that happens and brings down SMCI and these other names with it. Then again, I do think you are susceptible to a capital raise at basically any time now. You AI traders would hate me if I was SMCI's CEO. I would be selling stock right now. I would screw over all the longs and raise billions of dollars in capital. I think the stock's susceptible to that at any given moment. So also be on the lookout for that. Some of you guys might say, good thing I'm not SMCI's CEO, and you're probably right on that because those call positions would get smashed. Now let's dive into this new note out from Adam Jonas. Adam Jonas says bearish overall sentiment. We expected bearishness from institutional investors given recent negative sentiment on the name, but there was barely any attempt to argue for a near-term bull case. From our read of the room, it seemed that everyone felt the stock would underperform over 6 months. Almost everyone felt the stock would underperform over 12 months. We acknowledge 2024 will be a challenging year for the global auto industry, which is reflected in our estimates. They say the AI narrative versus auto narrative. Elon Musk is seen as sidelining Tesla from the AI theme for 2024, allowing investors to focus on the deteriorating EV demand narrative. At the same time, an improving EV narrative is seen as a prerequisite for investors to underwrite the AI story. Tesla versus Magnificent Six. With so many institutional plays focused on AI momentum beneficiaries, What may not be appreciated is the potential for Tesla to be not just excluded from the AI trade, but actually on the other side of the AI trade. No revenue growth? Investors question whether there was a possibility that Tesla may not grow volume versus Q4 run rate of 2 million units. Could Tesla even show declining sequential or year-over-year unit growth this year? For a name where its management team was recently targeting 50% top-line CAGR, the change in sentiment on growth was not lost on this group. And then where do numbers bottom. We reminded the group that our full year 2024 EPS forecast stands at $2.04 non-GAAP versus consensus of over $3 per share. While there was little to no pushback on our forecast, which we think is in line with institutional expectations, the group nevertheless felt the stock would react negatively to potential further negative consensus earnings revisions. Now, what's actually interesting here is this, what's put in parentheses. He says, which we think is in line with institutional expectations. Yeah? You think institutional expectations are in the low twos for EPS? If that's the case, we could be looking at some big upside in Tesla stock because maybe institutions are a lot more bearish than we actually think they are. And the sentiment may be a lot worse than we think. Pretty interesting. He says, despite the bearish feedback, we remain overweight with a $345 price target. Our thesis on Tesla is that it is both an auto stock and energy/AI and robotics company. Now, indeed, Tesla's stock may actually explode higher here soon. Now, to me, I talked about this a little bit in the last video, but we're going to go more in depth on this here right now. You're actually seeing, in my opinion, an inverse head and shoulders pattern. Now, this is on kind of a micro time frame. This is dating back to Tesla's earnings, in which Tesla fell about 10%. This usually marks the end of a downturn and the start of a new upturn. Now, you can see this is kind of the first shoulder. You have the head, which is the low, and then you have the next shoulder. And then you get that breakout to the upside. And that breakout can be substantial. I think it looks like a textbook inverse head and shoulder. To me, it's pretty obvious to see that here. When we kind of have that blow off top, or Tesla stock explodes in more simple terms, I don't know exactly when that happens. But based on everything that's going on right now, Tesla's not priced for good news. Tesla's priced for very bad news. We just learned recently that Tesla may be looking to lay off some of their staff. That is directly going to affect profitability. That is what the markets have wanted to see for a long time now. Tesla's been behind the ball. Tesla really hasn't done any layoffs. They've actually added to their workforce, which is just not what the markets want to see right now in companies. Markets want to see companies focusing on profitability. If you're not profitable, working as fast as you can to get there. And if you are profitable, to become even more profitable, do either share buybacks or reinstate or start a dividend. That's what markets want to see. That is the game plan so far, well, for 2023 and for 2024. We are not seeing growth stocks being rewarded on earnings unless they are already profitable. And if you're not continuing to become more profitable and or returning cash back to shareholders via buybacks or dividends, stocks are not doing well. So here in the near term, I do believe this sets us up for a rally back into the low or mid 220 area, or even 210 area on the low side, as high as about the 220s. I also do think Nvidia's earnings could be very important for Tesla as well. So much capital has flowed into Nvidia, into other AI names, without any give back at all. Where does that money come from? It either comes from internally in the markets, which would be investors selling stocks to buy Nvidia, or it comes from external cash, right? Investors putting money into the markets. That has not been happening. You've actually seen outflows to stocks in 2024. And the average stock is not done well in 2024. Ever since about December 28th, it's been downhill for most of the markets. It's just the top 10 cohorts behemoths that are really driving stocks higher at this point. But when your AI stocks like Nvidia maybe start to lose hundreds of billions of dollars of market cap, that money can go elsewhere into other names. And I believe Tesla stock has been one that has been directly negatively affected by this recent AI hype or bubble, whatever you want to call it, because Tesla's lost hundreds of millions of dollars, billions of dollars in market cap, and it's likely went straight into Nvidia, straight into SMCI or other equivalent names. And it does appear, if you draw a simple trend line from really one of the last big gap ups that you've seen on Tesla stock, where Tesla went up about 11%. This was on January 26th. Connect the prior day's high, and you're getting a pretty solid bottoming trend line here, which you just touched back here as well briefly on February 5th when Tesla stock hit about 175. So I think this also suggests some upside from here. Now you are obviously in quite a bearish overall channel right now. And I mean, if you were to extend this trend line, yeah, I mean, from here, your upside could be around 240 on the higher end side. But then again, my estimates for Tesla are around $4.20 or so for EPS this year. I think the real question is, does Tesla focus on profitability? Do they start communicating with the markets better? In that case, the multiple could expand to 100. That would put Tesla stock at 420 by the end of this year. Or the multiple could expand to 80. That would put Tesla stock at about 336 by the end of this year. Tesla stock today is at about 190. That would be some very big returns if you're buying Tesla stock right now. So, I mean, even on a more conservative scale, if Tesla comes in at $4.20 of EPS and the multiple is, let's say, 65, that's still 273 for Tesla stock. Tesla was just trading with a multiple of about 65 until this recent fall. I mean, so take it for what you will, but I like the position that Tesla is in right now. And everyone forgets, buy low, sell high. No, what people are doing right now is buying high and trying to sell higher, which works for a period of time until it does not anymore. I feel very comfortable buying Tesla stock right now, knowing that nobody's very bullish on Tesla stock. I love those kind of trades. I love this opportunity that we are currently being presented. Now, not everyone has patience, and that's why some people get mad, and some people are, sellers of Tesla stock right now. But this is precisely when you want to be buying the stock. If you knew back here in July of 2023 that, Tesla stock was going to come down again to the 190s, you probably wouldn't have bought the stock in the 300s, right? And if you knew back here after Elon was, selling stock to buy Twitter at $100, if you knew Tesla stock was going to rally over the next 6 months from 100 to 300, you would have been buying all the shares you possibly could when the stock was in the 100s. Even at 190, if you knew the stock was going to run to 300, you'd be buying as many shares as possible. The thing is, you don't know as a definitive that Tesla will get back to $300 per share. But the question is, what has really changed? Why are people negative? I think all of it is really, really overblown at this point. I do want to argue briefly the narrative that some people have said. They're like, hey, why are you bullish on Tesla if Nvidia falls after earnings? Isn't that going to drag down the broad markets, which will drag down Tesla? Maybe, but not necessarily. I mean, if Nvidia comes out with something really bad, which I'm not forecasting, I'm actually expecting Nvidia is going to give you another A++ quarter with another big guidance raise. I just don't think it's enough at this point to satisfy the expectations like we seen last quarter. Nvidia fell 2.5% the next day. That could be healthy. 5, even 10% of a pullback could be healthy at this point. I don't think that necessarily means all of your big tech needs or will sell off. I think it's likely that they probably will, but that money will just get dispersed into other areas. Now, other areas of the markets have less market weighting than big tech names. So as long as you don't see some kind of washout of big tech, and you see maybe the Russell outperforming, Tesla outperforming, maybe let's call it Apple or one of the names that is not AI centric outperforming, I think you can more or less neutrally kind of see a neutral period of time, I guess is what I'm trying to say, without a crash in the S&P or the NASDAQ, and without, a march higher. Now, tomorrow we will have lots of economic data coming out. The most important data point will be at 8:30 in the morning tomorrow, and that is retail sales month over month. Now, last month you were positive 0.6%. This month you're expected to be negative 0.1%, which coming off of 0.6% last month, negative 0.1% on a month over month basis is still overall pretty strong on a net basis, right? That's a hard comp to be positive on, okay? So even negative 0.1% is not bad. If you come in positive, you might actually see the market sell off because that just shows maybe the economy is way too hot for the Fed to start cutting rates. Believe it or not, a big negative number here probably is bullish for our markets. Now, you're also going to get export prices month over month, import prices month over month, as well as inventory numbers, retail inventories, excluding autos, manufacturing production year over year, month over month, capacity utilization, industrial production year over year, retail sales year over year, retail sales excluding gas and autos, Philly Fed manufacturing index, and this comes with Philly Fed prices paid. That's going to be your big one you want to watch for. The Philly area inflation, call it that. That's kind of a catchy way of putting it. Last month was 11.3. We don't have an estimate, but if that does go higher, that's going to fuel a little bit of those inflation concerns. Philly Fed new orders, Philly Fed employment, Philly Fed capex, Philly Fed business conditions, and then you will get New York Empire State Manufacturing Index as well. So lots of, if you will, secondary data points. Retail sales month over month, that's going to be the big one that will move the market. But some of these other data points are still important, and you want to watch what's the overall direction of all of this data. Is this data pointing towards a strong economy? Is this data pointing towards a weakening economy? A weakening economy right now is probably going to be bullish for stocks, at least a slight weakening. A reacceleration in the economy is probably going to be bad news for stocks. Now, this data coming tomorrow will affect the GDP estimates. And here's the Atlanta Fed GDP Now tracker. They're estimating 3.4% GDP for the current quarter that we are in. It says right here, the next GDP Now update is Thursday, February 15th, and that is going to be tomorrow. So depending on how these numbers come in, it will affect GDP estimates. Now, why is that? 70 to 73%, 75%, depending on what kind of economy you are in at any given moment in time, is directly tied to people spending money, right? Consumerism. That's why America is where it is, because people spend all of the money they make plus some on an aggregate basis. It fuels a lot of economic activity. And if retail sales come in bad, GDP's gonna fall, which is probably good news for the Fed. If it comes in hot and heavy, which is a possibility as well, then GDP estimates are probably going to rise. That means maybe not as many rate cuts, or at least it's going to take longer for rate cuts. So tomorrow's retail sales number is actually more important than you might think. That is going to conclude this video with Tesla stock up almost 1%. Here in After Hours Trading. My name is Michael Tyler here on the YouTube as well as on X. If you guys want to go follow the action over there, be my guest. It's free 99. There's no taxes and or fees involved. If you guys also want to check out the link down below in the description of this video, feel free to be my guest. Come trade with us live in real time. I send out all of my alerts as I make trades. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.